Hello, you're watching Deal Flow, the CNBC Africa show that brings you insight on merger and acquisition activity in Africa and beyond. I'm Erica van der Merwe. The JSE-listed diversified logistics group Imperial Holdings has been making bold acquisitions in the pharmaceutical and logistics industry over the past 2 years or so. This as it seeks to fulfill its mission to build its capabilities in African pharmaceuticals and FMCG distribution. Its very latest deal, the purchase of a 70% shareholding in a small Dutch wholesaler of medical supplies across Africa, continues this trend. To discuss Imperial's strategy and plans, Wayne McCurrie, who's from Momentum Wealth, and Govender from Vunani Private Clients. Lovely having both of you here. Viv, starting with you. So it's a smallish deal. First of all, it's so small that Imperial did not have to declare it, but they did. So it's 46 million euros. The size of the deal, turnover of about 60 million euros. This is Emirates, based in the Netherlands. So it's small, but it's significant, and it continues this trend of the past 2 years.
Yeah, look, even though it's based in Europe, it's actually focused in Africa. So that's the actual theme behind it here. So it's actually an African expansion, like an opportunity, which is what Imperial is looking to do for, I think, quite some time. Growth rates in Africa, South Africa certainly exceeds South African growth rates and what they're likely to see in Europe going forward. So they need to find somewhere in which they can find some kind of organic growth happening, obviously through acquisition as well. Yeah. But they need to find a place in the world that they can actually make more money going forward. And South Africa doesn't look like a place, and Europe at the moment, because of the some of the issues around that, also doesn't look like the place to want to be. So it's a way to get into Africa. There's talk about the African continent expanding significantly faster than virtually any other part of the world, with the exception of Asia. Still, there's a lot of greenfield opportunities out there, a lot of demand for the kind of products that Imperial can bring into it, a lot better margins than they have in much other parts of the world, especially in South Africa or in Europe. And that's, I think, the idea behind the deal.
And when specifically pharmaceuticals, the rationale there, are there better margins there? Is there far lower penetration?
Well, look, Imperial will get the distribution payment, they'll participate in the distribution, but they're actually, in buying into the company, they will participate in margin as well. Now, this company specializes essentially in making kits, and then it's really disaster relief. So they will be doing very well in West Africa now. So, but it's part of the whole expansion of Imperial's base business case, which is logistics and distribution into the rest of Africa, as Viv said, to try and cash in on higher margins, bigger business, stronger economic growth, etc.
Viv, if you look at the rationale listed by Imperial in the SENS announcement, so access to this key market, it complements the recent acquisitions that we've referred to, and access also to the skilled management team who understand this market, and because it's medical devices and kits, far more high skill. Yeah,
look, I think there's opportunity to be found. I think, speaking to some of the guys from Imperial, there's obviously an opportunity to get things, especially from places like India, where you can find pharmaceuticals at far cheaper rates than you would find even South Africa. Generics, as well as sometimes originals, at very, very low rates. Bring it into places in Africa where they are needed. A company that can do that has obviously got a great business case to be, to go forward to. So I think this is this acquisition is just part of a series of acquisitions, both in the past and going forward. I think that is going to support that kind of particular business case.
Well, we bring you now a quick overview of the Imperial Holdings Group and its recent history of acquisitions.
Imperial Holdings is a diversified industrial services and retail group which started out as a motor dealership in downtown Johannesburg in 1948. Today, the company's activities include logistics, car rentals, vehicle distribution, and retail. The company will yet again expand its business with its acquisition of the Dutch wholesaler of medical supplies, Emirates BV. Imperial Holdings' 70% stake in the business will further the group's strategy of growing its business of consumer goods and pharmaceuticals in Africa.
Wayne, if you look back at the Imperial history, it's a long history and a long history of deal making, and going perhaps not that far back, but if you look at Bill Lynch and what that man achieved, tell us about those times.
Well, look, Imperial was started by Percy Abel Kopp, and he had Toyota dealerships, and he was the king of Toyota dealers, and he had some very cheesy ads with a crown on his head, and that's where Imperial comes from. Then it was listed. Bill Lynch took over. The company had a wonderful time in the 1990s, late 90s, one of the darlings of the JSE. Price earnings ratio, to make your eyes water, did extremely well. Then maybe a little bit of sideways movement in respect of the share price and the fortunes of the companies. Bill Lynch won, I think, Entrepreneur of the Year award, world in the whole world in 2006, somewhere around there. He unfortunately died in 2008. The company was split into Imperial and Equestra. All the heavy machinery, heavy capital finance went into Equestra, and now we have Imperial as we know it, which is logistics and motor cars.
Viv, if you look at that transition, you had Bill Lynch and subsequent to that Hubert Brody as CEO, now of course Mark Lamberti CEO, but that transition, always, often when you look back at companies on the JSE, you see the entrepreneurial side, and perhaps it was that era of expansion, and then Hubert Brody perhaps more consolidation, as well as some sort of acquisitions more far afield. How would you describe that era?
Yeah, look, I mean, it obviously has to do with the situation you find yourself in. Right now, the business cannot continue in exactly the way it is. It has to diversify itself, find new sources of revenue, because its traditional sources of revenue are going to be under pressure going forward. The areas it operates in is going to be under pressure going forward. If you're going to stick with where you are, you're going to be left behind. The opportunities are great, especially, like I said, in Africa, so you want to be exposing yourself to this faster growing economy. And a business like this is very, very geared towards the economy. So whatever the economy does, it kind of mirrors or is leveraged off in a business like logistics, because economic growth goes up, logistic demands goes up, so you want to have that kind of linkage up. So if you're in an environment where you're seeing GDP being quite flat, you're seeing, growth prospects being quite negative, you're not going to do well. So you have to have that expansion. So it's in the case, I think, some cases it's good to be entrepreneurial, but other cases you're forced to be so. Yeah.
Viv's referred, Wayne, to the African expansion, but of course there was also European expansion under Hubert Brody. So some interesting deals there, perhaps risky if you think from a RAND perspective. But
well, look, at that stage when he went overseas, it was the big thing to get global exposure, global expansion. At the moment, Europe doesn't look that hot, as we all know. They're probably in a recession there at the moment. But I think longer term it will actually pay off for them, even if it only pays off in rand weakness over time. So I think the expansion is good, but the same as the name of the game 10 years ago was expansion into Europe and America and developed world. Now the name of the game is expansion into Africa. Right. And every company, virtually every company's set of results, when you read them, they say the home operations, the South African operations are mediocre to poor, but the African operations are fantastic, and that's where all our growth is coming from. And obviously Imperial wants to expand their African operations as well.
But Wayne, if I were to ask you to give an opinion on this, so is this a healthy situation for Imperial Holdings to be in, to have the diversification across developed and emerging markets? So do you think it's too much of a spread in its focus to have businesses in Europe?
Look, I think you're probably right in that assumption. I mean, it's very difficult to manage developed and developing markets. You've got to have you've got to have a niche, you've got to have a concentration, you've got to know what you're doing. So, automatically you would think that, maybe developing markets would be more akin to their culture and their experience and their knowledge base. But over time, I think the European operations, once Europe recovers, will be fine. But I do agree with you, it is a little bit, diversifying into the two areas is, I think, more difficult than essentially sticking to your knitting.
Although over time it may well pay off, it may well be good to have this diversified strategy. And going back to the sort of African pharmaceutical and FMCG expansion, so Imperial making very clear that this recent deal, Imres, this acquisition of the small Dutch company, is just part of the strategy. And if you look at the list of acquisitions done, so 2 years ago, September 2012, RTT Health Sciences was acquired. It's now rebranded Imperial Health Sciences. A recent announcement by them, they implementing a 210 million rand facility in the Kenyan market, so with the capacity then to spend. Other acquisitions, MDS Logistics in Nigeria, also in Nigeria, Eco Health, and then from South Africa, Durban-based business Pharmed. Your view on the deals? Yeah,
look, I mean, the African business it's coming off a small base, but it has been growing really fast, and it's far faster than what they're seeing elsewhere. And they're looking to spend a lot of money there. About 30%, I think, of the investment spend is going to be going probably towards Africa in terms of the logistical division. Look, I don't think they're just being blanketing Africa. I think they're looking at east, west, and south, and ignoring north to a certain extent. You want to have in a situation like this, you want to have some synergies. You don't want to just have different parts of the puzzle just working on their own. You want to have a global logistical company that kind of, with the different parts complement each other to a certain extent. I'm a bit more negative about, Europe. People always, talk about Europe coming back eventually, but when you look at a place like, say, Japan, you can have these periods, especially when you have lackluster, overarching monetary and fiscal policy, decisions being quite conservative, you can see a large developed economy stagnate for decades. It's a possibility. On the other hand, you look at Africa and you just can't see why it would not grow as it has been growing for the last little while. The growth rates in Africa are significantly faster and driven by things such as, working age population growth, off a very low base, calming down in terms of the security situation in a number of parts of the world. So I think, Africa is probably a safer bet, even though people think, Europe is safer than Africa. Africa is probably a safer bet, I think, in terms of the expansion as opposed to some of the developed world.
Wayne, that's the top line story, the growth that we're seeing. What about the pricing? Do you have any insights on the valuations implied in these deals?
Certainly not in this deal. They just tell you what's about 650 million rand, and they tell you the turnover and no profits. But it is a small bolt-on acquisition to what they have recently been doing. So I don't think this will make or break Imperial. But it's quite clear, you can compare African growth now to where China was, let's say, 20 years ago. 20 years ago, you started to hear these words, Chinese growth, and it was all a little bit vague and a bit airy-fairy. And then all of a sudden, 10 years later, China takes off and it's the second biggest economy in the world. Now, I don't know whether Africa will do it that quickly, but you're hearing the Africa growth story. So, maybe in 10 years' time, the African growth story will be a major component of virtually all of our domestic companies, banks, industrials, retailers. Because if the growth rates carry on at 5-6%, it quickly becomes really, really meaningful. And obviously Imperial, along with a lot of other companies, want to get in there now.
And if you leave it too late, it's too late to benefit.
Right now, there's not much competition, so your margins are higher.
And that's arguable, right? Because I think there is already a fair amount of competition from emerging markets, developed markets. Viv, to close off with, so I just want to get your views on Imperial Holdings as a stock, perhaps its valuations or its peers.
Yeah, look, I like the growth prospects going forward. I just think that the current situation, its exposure to Europe and South Africa being such a large component of its current earnings, is going to put the company under pressure going forward. I just don't think that we're going to see either a turnaround in Europe or South Africa quickly enough. And I don't think the African business, even though it's got great prospects in the future, in the short to medium term, is going to be enough of an impact on their bottom line to justify, going long on the stock.
So this is for patient shareholders, Wayne?
Yeah, look, the rating of the share is not terribly expensive. So it's probably reasonable value, but when you read statistics from the National Credit Regulation, then 1 in 2 South Africans with debt is behind in payments, and you see what's happening in the furniture credit industry and all the consolidations there, I agree with Viv. I think it's going to be tough for the domestic consumer-orientated portion of their business, and it's going to be tough for everyone in that business, especially if you're relying on credit.
Right. Well, Wayne and Viv, thanks so much for your insights. My guests were Wayne McCurrie, he's from Momentum Wealth, and Viv Govender from Vunani Private Clients. And from me, Erica van der Merwe, and the whole Deal Flow team, it's goodbye for now.